Faced with a crisis of the euro area system, we are seeing the costs of financial instability at first hand. The symptoms of the crisis have been widely reported. Many European governments are seeing the price of their bonds fall, undermining banks' balance sheets. In response, banks, especially in the euro area, are selling assets and deleveraging. An erosion of confidence, lower asset prices and tighter credit conditions are further damaging the prospects for economic activity and will affect the ability of companies, households and governments to repay their debts. And that in turn will weaken banks' balance sheets further. This spiral is characteristic of a systemic crisis. Given the current exceptionally threatening environment, the committee recommends that if earnings are insufficient to build capital levels further, banks should limit distributions and give serious consideration to raising external capital in the coming months. This recommendation doesn't reflect a view on the committee that the current level of capital in individual...
Well, Greece is at boiling point, with police firing tear gas at crowds of angry protesters. Thousands of demonstrators are trying to block access to the Parliament building, where the government is discussing more cutbacks to secure further rescue loans. RT's Sarah Firth is watching events unfold in Athens.
We did see clashes between the police and the protesters just a little while ago. The police letting tear gas into the crowd. Now it's still you can really feel the tear gas on the central street here in Syntagma Square. When it happened, a load of people trying to clear the area. A lot of people turned out today, so there was a major...
Economists all over the world are keeping their eyes on Greece tonight. The socialist government there is teetering. Power-sharing talks have collapsed, and new austerity measures have sparked outcries. Add to that the possibility of a default, and you have a very messy situation that has global implications. Here to sort it all out for us is Fox Business Network correspondent Peter Barnes. Good evening, Peter.
Well, good evening, Brett. Financial markets have been rocked by concerns that Greece may default on its debt without another big bailout, and that could create problems for U.S. banks and their customers. Greeks are rioting again over a new round of austerity measures. New taxes and budget cuts are required as part of a $160 billion rescue plan from the European Union and the IMF last year. But the Greek prime minister faces a revolt over the proposed measures within his Socialist Party, which controls the parliament. He shuffled his cabinet and is calling on lawmakers for a vote of confidence in his government. The Obama administration gave the Greeks a vote of confidence today, saying they have the capacity to handle their problems. It urged them to follow through with belt-tightening.
A weak bond sale auction in Germany has sparked fears that the debt crisis is beginning to threaten Europe's strongest economy. How worried should we be? And what's the fallout for the entire Eurozone, already reeling from a worsening economic and financial situation? This is Inside Story. Hi there, I'm James Bays. Is the Eurozone crisis now getting even worse? For 2 years, the number of troubled countries has grown. Economic crisis and political turmoil spread to Greece, Italy, Spain, Portugal and Ireland. All the while, one country, above all the other members of the 17-nation Eurozone, has been seen as totally safe, solid and stable. Now, though, mighty Germany, Europe's economic powerhouse, has had a rude awakening as a sale of their government bonds has flopped. Investors didn't buy all of the $8 billion on offer in German bonds, usually considered a safe bet for investors. But the failure sent stocks diving across the globe, and the euro slid to a 7-week low against the dollar. And as the leaders at the helm of the Eurozone's 3 largest economies met in Strasbourg on Thursday, the question people are asking, if Germany can't sell their prized assets, what hope does the rest of Europe have? German Chancellor Angela Merkel was quick to defend the bond failure.
I think it is inappropriate that the Commission proposes Eurobonds as a solution. Just by proposing it, the impression is given that sharing debts will solve the problems we have with the structure of the European Monetary Union, and this will not be the case.
We are, with today's discussion, in complex financial territory. But fear not, we have a panel of guests who'll try and make sense of it all for you and for me. And joining us from London, we have Angus Campbell, Head of Sales for London Capital Group. Richard Milne is the capital markets editor at the Financial Times, and Tim Ollenberg, a senior economist for the Centre for Economics and Business Research in London. Welcome to you all. Let me start with you, Tim. We hear about the bond markets, we hear about this bond auction. Tell us exactly what that was and why it is so worrying.
So what happened is that the German state, like all countries, borrows money from the market on a regular basis, and the latest auction was not fully subscribed, and this is something of a unusual event. Usually investors are quite keen to buy German debt and will pay what it takes to get an allocation of that debt, and the last one, a significant chunk, was not sold. Now, that may have had some technical reasons of that particular debt being sold, but it seems to indicate that confidence is waning even in the core countries of the Eurozone now.
Richard Milne, you're from the Financial Times. I was on your Financial Times website earlier on. One article said Germany's the only first-class passenger on the Titanic. Is that how you see it? Is this pretty disastrous?
I don't know that I'd go that far. That's pretty inflammatory language, but it's certainly clear you've had this spiral of events. It's moved from Greece. A few weeks ago we started talking about Italy, and then it moved on to France. Of course, Germany is at the top of the house of cards, so to speak. So I think this is really important, and you see it also that US bonds are becoming much more attractive to investors. I mean, if Germany gets infected, it is big news. I suppose the silver lining for some investors is that maybe if Germany starts to get really impacted, then that'll force it to move, because at the moment Germany's holding dragging its feet on a lot of subjects in terms of trying to solve this crisis.
Angus Campbell, what's your view on this? Was this just a glitch, or is this a big problem?
Well, we will have to wait and see until next week. In the run-up to the end of the year, there are several very important bond auctions into the end of this year. In fact, funny enough, you mentioned Germany being a first-class passenger on the Titanic. I would probably classify them more as maybe business class than first class. This is a clear indication that investors' appetite for even Europe's paymaster, the biggest economy in Europe, is waning. Global investors are unsure, they're uncertain, and feel that maybe even Germany, which is itself suffering from